What's up, everybody? This is Ryan Mallory, and I'm excited to talk to you guys today about taking profits. Partial profits, full profits, just a little bit of profits. But you're going to be taking profits, and this is why this video is so important. The stock market on any given day can take this elevator straight down. Traditionally, the market takes the stairs up, and then it just takes the elevator down. And what does that do? That creates a lot of panic, creates a lot of stir, and it usually happens at the height of greed. So everybody's feeling euphoric and everybody's feeling good, and then all of a sudden the market just pulls the rug out from underneath everybody, and everybody's left to panic and sell things as fast as they can and just make a lot of bad decisions. So how can you avoid the hysteria and the panic? Let's take a look at the S&P 500, and you're going to see firsthand how bad and how ugly the market can get. You can see here from September, October, November, and December, and for most of January of 2020, it was going up day by day, very dependable, very systematic. And then what happens? We have a virus that hits the market. Not literally a virus that infects the market, but a virus that infects a population of people over in China, and all of a sudden the US stocks are just plunging. And within 6 days, the stock market takes out the entire year's gains and half a month of December's gains. And it may not even be done yet. So how do you avoid that? Well, you have to take profits along the way. For example, let's take Royal Caribbean, symbol RCL. Got into it on November 21st. That would have put us right around here. And it was breaking out, had this nice double bottom, and it continued to rally and rally and rally. And come in January, on January 6th, I decided to take about half off the table there. Yeah, pulled back a little bit. I wasn't sure if it was going to keep going, but I wanted to make sure that if it did start to sell off hard, I had secured some of my profits. And so I sold the first batch, or first half of the trade, at $131.43 for almost a 13% profit. Now, what did it do? For the next few days, it just didn't really do anything. And so it eventually broke on January 21st below the 20-day moving average. I went ahead and got out at $129.98, and that gave me a 11.5% profit on the second half of the trade. So combined, it's about a 12% profit between the two lots I sold. And guess what? It's free commissions now with almost every one of your brokerages, so it doesn't even hurt you from a commission standpoint to go ahead and sell partial positions in order to book profits and to ensure those gains. Now let's just say I wanted more and more and more out of the stock market and wasn't willing to take profits along the way and ultimately close out a trade because the trade just stopped working. Well, look at this. It fell apart. This was just the first day of a many days of selling thereafter. Never think that a stock can't sell off and get very ugly on you, no matter what stock it is. It can be Apple, it can be Facebook, it can be Royal Caribbean, it can be Twitter, it can be Beyond Me, any of them. They can all really hurt you if you don't manage the risk. So Royal Caribbean has sold off, mainly because of the coronavirus. Had I not sold when I did, I would pretty much have lost all my profits. Let's take BYND, for example. I got into this one back on January 9th, and I got in at around $87 a share. It was breaking out, it was really exciting. Couldn't be more thrilled to be in the stock. It was the first time I've ever traded it. Continued to rally day after day after day. On January 10th, only a couple days into the trade, I sold half of my position for about an 8% profit. That's okay. I didn't mind that. I was making sure I was going to come away with some profits in the trade. I wasn't sure if it was going to keep going higher or not. The days that followed, it just continued to rally higher and higher and higher. And then on January 14th, I got stopped out at $120, which was 37% higher than where I got in at around $87.75. By going ahead and taking partial profits along the way, yeah, I might have been selling a little bit too early on that first half of the trade. However, I was still able to continue to make profits along the way because I gave it room to run. Even though I was securing profits early, I still gave it the opportunity to continue to run higher. And that's what matters in trading. You don't have to hit home runs every time. You don't have to maximize the trade as much as possible. You don't have to. And also, when you're selling some of your position along the way, you're taking some of the emotions off the table too. You're able to see a little bit more clearly what you're dealing with because there's less capital at risk, and you can let the winners run knowing that you've already secured profits in a half of your trade or a third of your trade or a quarter of your trade. It's really up to you to decide what you want to do. Now, I'm not a perfect trader, and I'm never going to claim to be. Let's take a look at Nutrien, symbol NTR. I got short on it on 11/26 at 47.60, but it doesn't really do much, so I keep holding it, and then finally we do get that breakdown. I waited a long time, but when I looked at the weekly chart of this thing, I said to myself, gosh, there's a lot of support at this $44 level. And so I let a little bit of the greed get the better of me. I went ahead and covered the entire position for a 7% profit. Great, but what I should have done is taken only half of half of the profits off the table, or half the position off the table, and let's just see if it can continue to drop further, which it did because the market continued to weaken and it continued to drop further. So I left an extra 3-4% on the table that could have been had. And I have plenty of more examples like this, but what I wanted to do is just show you a couple of them that helps highlight the need to take profits along the way, because you never know when you're going to see a sell-off like this that takes everybody by surprise and really just stomps out all your long positions and takes the profits away. But if you take profits along the way, you're going to be just fine.